Now, just going back to the comments from James Gorman, one thing I want to pick up on that he said is he talked about falling unemployment, recovery in housing prices. He also saw signs of quickening inflation. And that's something I wanted to pick up on because a lot of other people don't. And the latest data is showing a slowing.
Well, we've got to bear in mind that what the latest data is really showing is just noise. The big inflation story was the aberration, the really unusual drop in oil prices is over, and that took inflation up over the last 6 months. That was blindingly obvious. Every economist on the planet knew this was going to happen, and here we are. Now we're back to normal, literally to normal. Every single consumer price inflation measure in the States is at or above its 20-year average. You've got a normal inflation environment. PCE deflator, core, headline, doesn't matter what you look at. They're all at or above their 20-year averages. And that tells us that we're back in a normal environment. We get weird quirks, you'll get noise, you get this Verizon mobile phone thing which causes a temporary distortion, knocks 0.3, 0.4 off the headline inflation rate, fine. But we're basically in a normal inflation environment.
Now, that is really interesting. So do you think, therefore, the Fed really is at risk now of getting behind the curve?
I think the Fed has been at risk. I think what they are doing now is coming out with a clear plan for continuing to tighten on monetary policy. I think the interesting story is what the Fed is doing on quantitative policy. The fact that they are preparing to basically pre-announce a multi-year passive tightening of quantitative policy is, I think, quite an interesting story.